This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
NASDAQ freezes, the Dow thaws. A massive system glitch stops all NASDAQ trading for 3 hours as the Dow scores its first gain in more than a week. Can today's trading systems be trusted? And is your money safe?
Hewlett Laggard, the world's largest maker of personal computers, has its worst day in 2 years, feeling the heat of soft PC sales. Is the company's turnaround strategy in trouble?
And the American worker. Wages have been flat for a decade, even as corporate profits rise. And experts say the impact is showing up in a critical area of the economy. All that and more tonight on Nightly Business Report for Thursday, August 22nd.
Good evening, everyone. If you wanted to buy or sell shares today of Apple, Google, Intel, Microsoft, or any other stock listed on the NASDAQ, you couldn't. The reason? For more than 3 hours, trading on the NASDAQ was halted because of a major computer glitch. The unprecedented shutdown froze out thousands of securities and raised new questions about the safety of electronic trading and the impact on investor and business confidence in U.S. markets. This is the latest in a series of technical snafus that have paralyzed the markets, like the botched initial public offering of Facebook last year and the so-called flash crash at the New York Stock Exchange back in 2010. Bertha Coombe joins us now from the NASDAQ with more. Bertha, what an extraordinary day.
Quite an extraordinary day, Susie, and a lot of folks on Wall Street are saying, thank goodness it happened on a quiet Thursday in August. Essentially, if you look at the day's chart for the NASDAQ composite, it essentially flatlines for 3 hours because none of those stocks listed here on the NASDAQ was trading. What appears to have happened was a glitch in the system where you get the prices and quotes on trading stocks. With an inability to see those prices, they had to shut the system down. Let me give you the timeline. About a quarter after 12, the NASDAQ reports that they're starting to see some problems with that system in terms of price quoting. A few minutes later, around 12:25, they stopped not only trading on options, which is where the pricing problem first appeared, but then on all of the NASDAQ stocks. And they were unable to trade NASDAQ stocks, not just on the NASDAQ systems, but on other systems across different platforms. Then at 1 o'clock, they updated and said, we are getting ready and preparing to restart trading. What we will do, they said, is start out with a few stocks that we will trade as a test for a few minutes to get pricing information, and then we'll open things up without giving an actual timeline for when that would happen. As it turns out, the testing with just 3 different stocks started at about 3 o'clock in the afternoon. And then it wasn't until about 3:25, with 35 minutes left to go until the opening bell, that they opened up all of the stocks here on the NASDAQ. The stocks acted fairly resiliently, really didn't move very much from where they'd been before the overall NASDAQ halt. This comes just 15 months after the massive trading glitch that prevented the smooth opening of the Facebook IPO back in May 2012. That debacle, as people call it on Wall Street, resulted in the NASDAQ being fined $10 million by the Securities and Exchange Commission because they felt that the NASDAQ had not done enough to upgrade its system to make sure it could handle the volume that day. The SEC is investigating this glitch, but at the moment, from what we know, it appears to be just a software glitch in that particular data stream.
All right, thank you very much. Bertha Coombs reporting from NASDAQ for us tonight. Joining us now to talk more about the impact of the NASDAQ shutdown on investor confidence is Richard Repetto. He's a principal at Sandler O'Neill. Richard, welcome. Good to see you. Can today's trading systems really be trusted? We asked at the top of the show. And is my money safe?
Well, I think, today's systems are strong, but these little glitches are, blips that we're having, I think is going to bring more let's just say, oversight from the regulators and a greater effort by the industry to reduce these problems that we're having.
You know, for investors at home watching all of this going on and listening to our news, they just throw up their hands. I'm sure many of them say, you know, this keeps happening. And that's why many of them are staying away from the stock market. Is that just the way it's going to be? Or is there anything that can be done to simplify the system so that we can keep the individual investor in?
Well, I think the industry and the regulators are going to take a hard look at it this time. I think this is a, call to arms, so to speak. But the one thing I'd sort of highlight is, at least with this one, it doesn't appear like there was a lot of damages or the monetary damages to people because everybody was shut down. It wasn't like you were held in position while the stock traded away from you. The stock just didn't trade. So it is a crisis of confidence, but as far as the damages, I think that they were limited in this problem.
What if I'd put in, Richard, an order to buy or sell a stock right around that time? What happens to me? Did that order ever get executed?
When the system shut down, I think that was the quote period when they started back up, what Bertha was explaining. When they started back up, they allowed people to cancel their quotes or orders or to put new ones in. So they allowed for that 15-minute window so people could get, reposition themselves if they wanted to. So you weren't going to get stuck with an order that you put in at whatever time this happened, 3 hours earlier, and still have to, live up to that order 3 hours later. There was that period, that grace period.
Richard, let me ask you a little bit about the business of being in the exchange business. We know that there have been glitches at both the New York Stock Exchange and also the NASDAQ, maybe more at the NASDAQ. But this also knocks down business confidence in the exchanges. And so there are a number of, big companies that want to offer their stock to the public. Twitter, a lot of talk about Twitter offering their stock. Do you think that they would feel more comfortable of listing at the New York Stock Exchange rather than NASDAQ after today's episode?
I mean, you have a good point. I look at this as an industry issue because it could happen to anybody. And just so you know, the problem was with this price dissemination stream, in complex terms, it's called the UTP SIP. But NASDAQ operates that for NASDAQ-listed stocks. The NYSE operates it for NYSE-listed stocks and the ETFs as well. So it could have happened to anyone. What the industry needs to do, they need to go through this airplane accident, analogy where when there's a problem, that you have to really take a serious look. The Transportation Board comes in and investigates. Here, the SEC or a regulator needs to come in and take a hard look, as well as the industry come together to put in the remedies and the fixes. It just doesn't feel like there was a whole lot done after the flash crash, and I think that's the level of response that's needed to regain the confidence that you both speak of.
Richard, thank you very much for joining us tonight. Richard Repetto of Sandler O'Neill.
Despite those massive troubles at the NASDAQ, it turned out to be a solid day on Wall Street. All the major averages, even the NASDAQ, posted gains. Stocks got help from a surprise lift in manufacturing, both in China and here in the U.S. Also helping, leading economic indicators, a gauge of the country's economic health, rose in July, pointing to stronger growth in the second half of this year. And even though first-time jobless claims edged up last week, the government reported home prices surged again in June, up nearly 8% from the same period a year ago, giving home builder shares a boost. The Dow today gained 66 points, breaking 6 straight sessions of losses. The NASDAQ, which was up 31 points when trading was halted, ended the day up 39 points, and the S&P 500 added 14 points. The yield on the benchmark 10-year Treasury note rose above 2.9%. This is the highest in 2 years.
Well, despite those gains in the Dow today, Hewlett-Packard, which has been the biggest gainer in the blue chip index so far this year, dropped sharply today. That's after sales of PCs fell again last quarter and the company sold fewer computer servers. Now, investors are wondering if CEO Meg Whitman's 5-year turnaround plan for the company may be in jeopardy. John Ford has our story.
Hewlett-Packard's comeback has hit a bit of a snag. CEO Meg Whitman saying last night she no longer expects to see revenue growth in fiscal 2014. That disappointing news sent the stock down about 12% in its worst trading day in 2 years. Now, that made HP just the latest big business-focused tech company to give a disappointing report. Revenue came in short at IBM and Oracle, and Cisco announced layoffs last week after offering shaky guidance. Whitman, in an interview today, said things are still on track, closing out year 2 of what she's called a 5-year turnaround.
The reason I said 5 years is that's what I actually thought. I didn't say 5 because I thought it was 3. When you do turnarounds, there are bumps in the road. There are ups. There are downs. These things are not usually linear.
Whitman said yesterday things went especially awry in Q3 with pricing pressure on servers, slow sales of PCs, and other factors taking a toll.
My view is we've got a lot more work to do on supply chain, on logistics, on our enterprise group side. And then, frankly, we have to make sure that we have the right product for the right market segment.
The question now, can HP fix those problems with new leadership? Whitman replaced the head of the enterprise group, Dave Donatelli, with Chief Operating Officer Bill Vecti yesterday, and brought marketing under communications chief Henry Gomez. Now, there are plenty of challenges in the year ahead still, especially since Whitman has promised to push into smartphones and get more ambitious in tablets, areas where the company has been a non-factor so far. For Nightly Business Report, I'm John Fort.
President Obama was in Buffalo, New York today, unveiling a sweeping new plan for rating the nation's colleges. The idea here, to evaluate schools on a host of metrics with the goal of linking those ratings to the amount of federal financial aid that students at those schools receive. John Harwood joins us now from the White House with more on all of this. So, John, let's just start by asking, what criteria is the administration going to be using when they rate these schools?
They're going to be looking at things like graduation rates, how fast people graduate, what kinds of jobs they get after they graduate, and of course also the tuition rates. The administration is trying to push down the core inflation rate of college costs. This isn't about putting more aid in the hands of students. It's taking the aid that's out there, about $150 billion a year, and trying to use that as a lever to get colleges to try new things, online courses, other strategies to get costs down, and they will need some help from Congress to do it.
I suspect, John, that a lot of schools are going to really bristle at these kinds of metrics to measure performance.
Well, certainly colleges that come out on the wrong side of the metrics are going to bristle at those. The winners will like it a lot better. And you can expect some opposition in the Congress from Republicans who don't like the heavy hand of the federal government coming in and trying to steer aid dollars this way. So the president's got a big fight on his hands. What he can do on his own hook without Congress is develop these rating scorecards and try to use transparency to put it out there so parents and students can make decisions and try to affect some change that way as well.
And what about the role of Congress in all of this? I mean, what can Congress do?
If you're going to change the way federal financial aid flows and change the colleges that get that financial aid, Congress is going to have to say yes. The administration's had some difficulty getting Congress to go along with their plans for secondary education with a small amount of federal aid there. This is another case where the federal aid is not the preponderant amount of money that's spent by colleges. States control state universities, and of course, private colleges are private, but they're going to try to do what they can on their own and see if they can get Congress to go along, if not in this administration, pave the way for a future administration to make some headway.
All right, John, thank you very much. John Harwood reporting from Washington tonight. Well, still ahead, a lost decade for wages. A new report shows that pay hasn't budged for American workers for a long time, and that could start pressuring a key area of the economy. First, so let's take a look at how the international markets did today. Here is something you may not have expected to hear. Yahoo got more web traffic last month than Google. It's another feather in the cap of Yahoo's CEO, Marissa Mayer. Comscore reports that Yahoo attracted 4 million more unique visitors to its owned websites in July than Google, where Mayer used to work. This comes after Yahoo redesigned its signature website and after going on an acquisition tear, buying up small websites that are quite popular with younger customers. shares.
We begin our market focus tonight with another teen retailer reporting a troubling quarter. Abercrombie & Fitch reported profits well below expectations, blaming a drop in in-store visits by shoppers. And that's not all. The chain says business will decline even more during the crucial back-to-school quarter, and it issued a weak profit forecast. Shares plummeted nearly 18% to $38.53, making it the worst performing stock on the S&P 500 today. Aeropostale is also experiencing teen angst, the retailer posting disappointing earnings after the close today. It also issued a weak outlook and increased the number of stores it plans to close. The company blamed its problems on heavy discounting. Shares of Aeropostale dropped almost 4% during the regular session to $10.98 and then fell as much as 10% in after hours. The good news beat out the bad for GameStop. The video game retailer said second quarter profit fell 50%, but the company was bullish on its prospects for the rest of the year as new game consoles from Sony and Microsoft are slated to hit the market just in time for holiday sales, prompting GameStop to raise its outlook for full-year earnings. The stock jumped 9% to close at $51.91.
JCPenney's board adopted a shareholder rights plan aimed at preventing new investors from gaining control of the company. The move comes after activist investor Bill Ackman, Penney's largest shareholder, said he may exit his entire stake in the retailer. The plan is also known as a poison pill. The stock finished 1% lower today. Investors in Sears aren't seeing its softer side, but rather its weaker side. A rough day for the stock after the retailer posted a wider than expected second quarter loss. Revenue fell, margins pressured as fewer people entered the stores. The stock down 8% to $39.72.
Do you feel like you're earning less money now than you did 4 years ago when the recession officially ended? Well, if you said yes, you have plenty of company. A new survey shows that the average household income in the U.S. is currently lower than it was back in 2009. What does that mean for the American middle class and for the overall economy? Hampton Pearson gets some answers.
President Obama is back on the road, this time in upstate New York, telling a large crowd at the University of Buffalo 5 years into his presidency, reviving the middle class remains his highest domestic priority.
Any middle class family will tell you, we're not where we need to be yet. Because even before the crisis hit, and it sounds like Buffalo knows something about this, we were living through a decade where a few at the top were doing better and better. Most families were working harder and harder just to get by.
A new study of census data shows how much earning power the middle class has lost since the recession began. In June, median household income was $52,100, down $2,400 or 4.4% from 2009 when the recession ended. But if you go all the way back to 2007 when the recession began, median income is down 6.1% or $3,400, according to Centier Research. A separate study from the Economic Policy Institute says wages have been stagnant for a decade. Leading economists say a slow-growth economy with a tight labor market leaves workers with little leverage when it comes to wages.
The fact that not only are jobs too hard to come by, but also if you've got a job, the fact that there's so much slack in the labor market means that your earnings have been flat or falling after you adjust for inflation.
Those same economists say lost wages and lost purchasing power translates into less consumer spending, even though the overall economy is growing and the unemployment rate is declining. For Nightly Business Report, I'm Hampton Pearson in Washington.
While the wages of many average workers haven't grown over the past few years, it's a different story with chief executives. And now federal regulators are proposing a rule that will require companies to disclose just how much those CEOs earn, showing the gap between their salaries and those of the average rank-and-file worker. Mary Thompson has more.
3 years after President Obama signed Dodd-Frank into law, the SEC is now set to propose a rule next month requiring companies to disclose the ratio of their CEO's pay to the median pay of the company's workers. An advocate of the ratio, the AFL-CIO's Brandon Reese, notes with the average CEO of an S&P 500 company making $12.25 million last year, a CEO now makes 354 times more than the average worker.
That ratio is up from 42 times to 1 30 years ago. So we've got dramatic escalations of inequality within our corporations, and that's hurting employee morale, that's hurting productivity, that's leading to increased turnover, and that's what this disclosure rule is meant to fix.
Reese also claims the ratio gives directors who determine a CEO's pay a new and valuable tool that lessens the focus on what a CEO makes relative to other CEOs and more on how much he or she makes relative to their employees. The soon-to-be-proposed rule appears somewhat less stringent than expected. First, firms will be able to calculate median pay using a statistical sample of their workforce rather than looking at all of their workers' pay. And second, a source says the firms won't be required to calculate a worker's pay the same way they calculate a CEO's pay as it's presented in the annual report. While this might require somewhat less work, companies still maintain the ratio creates an expensive and time-consuming administrative burden. Critic Tim Bartle of the Center for Executive Compensation says calculating the ratio takes time, energy, and resources that then deflect focus away from far more productive uses, such as generating growth that produces jobs. As a proposed rule, it's likely to be made available for public comment for between 30 to 90 days before the SEC's commissioners have the final vote, a vote that will give the working class a lot to say on executive pay. For Nightly Business Report, I'm Mary Thompson.
And coming up, a prescription for fraud. We'll show you how the feds are fighting back on a problem that costs taxpayers and our healthcare system billions of dollars a year. But first, how commodities, treasuries, and currencies fared today.
Eli Lilly is being accused by a Chinese newspaper of spending nearly $5 million in direct kickbacks to Chinese physicians in exchange for prescribing its insulin products. The company says it's now investigating the charges, but hasn't admitted or denied any wrongdoing. Chinese authorities are currently investigating similar bribery charges against French drug maker Sanofi and British pharmaceutical giant GlaxoSmithKline.
Healthcare fraud is one of America's costliest issues, an estimated $80 billion sinkhole every year. Part of that fraud takes place in small pharmacies across the country. But now law enforcement is fighting back, and Andrea Day got a front row seat to an undercover sting.
We rode along with federal agents from Health and Human Services Office of Inspector General, along with a team of other local agents, while they took down Alexander Ilyev, the pharmacy owner accused of bilking Medicaid and ultimately taxpayers out of almost $1 million. All
right, so we're going to start creeping up.
We're now just blocks away from V&A Pharmacy in Brooklyn, while another team is following the drugstore owner, watching from a distance as he leaves his house.
Tailing the guy now.
As the team waits for word that the owner is close, Special Agent in Charge, Tom O'Donnell, walks us through the alleged scheme.
He billed Medicaid for prescriptions that he did not dispense.
A dubious plan, O'Donnell says, that went on for more than a year. Investigators say Ilyev enticed patients to bring their prescription slips to his pharmacy. But instead of filling prescriptions and handing out drugs, he allegedly handed out cash.
$20, $30, $40 per script.
From there, investigators say he'd bill Medicaid for drugs that were either partially filled or never dispensed at all, including billing for refills, and he'd rake in the cash. O'Donnell says focusing on prescriptions for HIV drugs like Atripla.
They reimburse anywhere in the neighborhood $1,400 to $1,500 for a 30-day supply. Very expensive. Anytime you have any drugs that are that high in terms of reimbursement, there's going to be a black market for it.
A scheme, according to investigators, that's being played out right now at small pharmacies all over the country. So why would patients want to get involved? Philip Shafroth is the fraud unit director for the Human Resources Administration. He says in some cases, patients don't want to take their medications and are just looking for pocket money.
And a lot of times they'll go back and they'll report that their medications were stolen, get police reports, and get a doctor to write them another prescription and go out and attempt to refill it again.
The pharmacy scheme, a growing piece of healthcare fraud.
It's between $184 million to $630 million of fraud a day. That is huge. It is the second largest white-collar crime in the United States.
We keep watch as the pharmacy owner walks up to the gate and opens up for business.
They're going.
Investigators make their move. Once inside, investigators show Ilya this video. It's an undercover agent posing as a patient. You can see the owner hand a prescription to the agent. Then he walks her outside and gives her $25, cash. Investigators say as an incentive to come back and bring others.
With this type of medication, I will give you more and more and more. Every time you bring me some patient, I give him medication, I take care of you, and I take care of them. From each patient, I will give you your commission. Even from each refill, not only one time you bring me, from each refill, I will take care of you.
When he looked at the video, what did he say?
Just straight up, he said, that's not me.
12 noon. Finally, investigators walk the owner out in cuffs. Then a search team moves in. And hours later, investigators emerge with boxes of evidence. One alleged scheme busted, but many more to go. For Nightly Business Report, I'm Andrea Day.
The Brooklyn District Attorney's Office is now bringing the case to a grand jury. Ilyuf is facing 17 charges, including healthcare fraud, grand larceny, and falsifying business records. He denies the charges and, according to his attorney, maintains his innocence and will vigorously defend himself in court.
Amazing story. Well, that's Nightly Business Report for us. I'm Susie Garrett. Thanks so much for joining us tonight.
And I'll see you all in a couple of weeks. I got a couple of weeks of vacation. Have a good time.
You have
Susie.
a good time.
I shall. I'm Tyler Matheson. Thanks for watching. We'll see you back here tomorrow.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrett with a Nightly Business Report news brief. A major computer glitch halted all trading at the NASDAQ exchange today for 3 hours. The unprecedented shutdown froze out thousands of securities, renewing concerns about computer-driven trading. Despite that, all the major averages, even the NASDAQ, posted gains, thanks to a rise in U.S. and China manufacturing, another increase in home prices, and a boost in leading economic indicators. The Dow gained 66 points, the NASDAQ up by 31 points when trading was halted, ended the day 39 points higher, and the S&P added 14 points. Moody's put the credit ratings of 4 of the nation's biggest banks on review for a possible downgrade. And Yahoo beats out its top rival. It had more unique visitors in July than Google. Be sure to tune into Nightly Business Report right here on your public television station.